Hi, thanks for joining me again. On any chart with decent liquidity and reasonable price movement, you'll see the price action moving in waves of buying and selling. The buyers have the upper hand for a period, and then the sellers. When I post the wave chart in my XJO daily update, you can see the waves of buying and selling. You can see the buying wave and the selling wave in response, and the buying wave and the selling wave in response. And whenever you see the selling wave become as long or longer than the buying wave, it looks like price will pull back. And then you can see the buying wave has shortened, and then there was a spike lower here, and then the buying wave increased and the selling wave shortened. And you can watch the waves of buying and selling in the market. And the wave chart is a great way of looking at it. And down here, the volume shows you the strength of the buying compared to the selling. You can see here the buying was very strong and the selling, there was hardly any. The buying was once again much stronger than the selling, and then only one day of selling. The buying is getting a little weaker here, and the selling a little stronger. Almost an equilibrium reached here, only one day of selling, and then price accelerates higher on a wave of new buying. And if you change the wave size, we'll put a 50-point wave on, you can look at the different waveforms in the market. A 60-point. $75. At some point, though, it's not really giving you any more information. I tend to think that the 35-point wave suits the XJO under most circumstances pretty well. But you can see the buying and selling waves. If you follow them and understand the market to some degree, you get a little bit more of an insight into the buying and selling into the market. Now on this chart here, if you were marking up the chart, you can see down here there was a buying wave, just a little small selling wave in response, and then quite a long buying wave and a short and shallow selling wave in response. Then a buying wave and a selling wave. Now, can anyone have a guess at what this might be, these two bars together? These two bars? Looks pretty seriously like a bearish reversal to me. Probably on some sort of announcement. Price spikes higher, but at the time, the demand in the market on the back of the announcement, or the potential announcement, that's what it looks like. And then the next day, pushes it down, it closes below the low of the initial up bar. And then a few days later, you get a pretty classic looking upthrust, a VSA style upthrust, and price breaks down in response. Then the market tries to recover, and it shows an inability to recover. And the reason price is unable to recover here, they perhaps bought in here on the back of the really good announcement, and prices were going to the moon, and then price broke down in response, and they're stuck holding at a loss. These are called weak holders. A weak holder is someone who, if they sell now, sells for a loss. And when price comes back to this level again, it gives some of these weak holders an opportunity to get out for break even or very close to it. And that selling pressure that comes in when price tries to move higher in response is what causes the resistance at this level. This is a breakdown level now, and it's why price finds it really hard to recover. And if price was going to recover, you'd generally find price would come up to this level and then gap up as a way of trying to encourage anyone stuck here not to sell on the back of potential profits and not losses. And that's why the professionals in the market will generate a gap up like this. So you can see the waves of buying and selling in the market. They become pretty clear after you've watched for a while. You can see here, this is a selling wave here. It's probably the longest selling wave on the chart so far. And then the up wave in response is quite a short, sharp and shallow up wave. And then another increased down wave and another short, sharp response higher. And if you mark the level, you can see price was unable to recover here and now it's unable to recover here. So there's supply now in this area here. If price comes up to it, it's giving these people a chance to get out. So now there's resistance here. So price then comes down in response. We mark the level again. You can see that on this down bar, this is the highest selling volume we've had since this issue came in here for the bearish reversal. And there's probably been some buying here, and that's shown by the next two bars being higher in response. Not on particularly high volume, but there's some attempt to support the market here. So when you look at a clean chart, you need to see if you can picture the buying and selling waves and mark them on the chart, because they will make it clearer and easier to understand. And it's just a matter of marking highs on the way up and lows on the way down. And they're confirmed each time by the inability to rally back above the breakdown lines. And you can see how the waves are responding in between these lines. This is how the market moves, in waves of buying and selling, or at least, like I said earlier, at least any decent market with reasonable price movement and pretty good liquidity. Hopefully that was of some interest to you. You can practice over the weekend marking up some charts of your own, see how you go. Thanks for your time. See ya.